Hey everyone, and welcome to The Explainer. Today, we're cracking open the brand new June 2026 Swiss watch export data. We're going to look right past the shiny dials and the big brand names to uncover a truly fascinating shift in global luxury spending. It's happening right now, and it is hidden right there inside the numbers.
Okay, let's dive into this. Before we throw a bunch of stats at you, we have to establish exactly what we're measuring. The term Swiss watch exports refers to consolidated export data straight from the watch companies. This caveat is absolutely crucial. This data tracks what is leaving the factory doors in Switzerland. It does not track what is actually being bought at the retail counter by end consumers today. But as a leading macro indicator of where the entire industry is placing its bets and moving its inventory, it is absolutely unmatched.
So here's our roadmap for today. We'll start with the big picture macroeconomic view, drill down into the materials driving the market, uncover this bizarre price polarization, map out the geographical winners and losers, and finally, figure out what this all actually means.
Let's kick things off with Section 1, the big picture.
The sheer scale of the Swiss watch industry right now is just staggering. In June alone, Swiss watch exports surged by 11.2%, pushing the total export value to nearly 2.4 billion Swiss francs for a single month. To put that into physical perspective, June saw a total volume increase of 123,000 items compared to the previous year, pushing total wristwatches shipped to 1.3 million units. So the volume is moving and the money is definitely following it.
And this brilliantly illustrates the momentum we're talking about. Notice the 12-month moving average recovery trend leading right up to June 2026. This recent June surge helped stabilize the 6-month cumulative performance at an impressive 12.8 billion francs. That almost entirely wipes out the dips we saw earlier in the spring, bringing the year-to-date drop to a mere negative 0.7%. They've essentially leveled the ship completely.
Moving right along to Section 2, materials driving the market. What exactly are they building to hit these numbers?
Well, when we break down the materials, the overall growth is undeniable. Every single category grew in export value. But look closely at the volume changes, the actual units moving. We're seeing significant jumps in everyday staples. Steel watches are up 7.0% in volume. And look down at the bottom there. Other materials saw a massive 21.9% volume increase. But if you look over at the value side, there is one specific row that completely defies gravity.
Just look at this, gold steel, or bimetallic models. While the basic materials grew steadily, exports of these specific two-tone luxury models absolutely leaped in export value by over 42%. What makes this so wild is that the actual physical volumes for gold steel only rose by 4.5%. That means the price per piece leaving Switzerland in this category has totally skyrocketed. Bimetallic watches are driving a massive wave of capital right now.
Which brings us to Section 3, the price polarization, the mystery of the missing middle.
So, the crucial point is this stark contrast we're seeing across the market. The entry-level segment, watches with an export price between 200 and 500 francs, saw an absolutely explosive surge of 54.1% in value. On the complete opposite end of the spectrum, high-end watches priced over 3,000 francs are also booming, growing by 14.2%. But look at the middle market squeeze. Watches priced between 500 and 3,000 francs actually shrank by 4.7%. The extremes are absolutely booming, while the middle class of watches is quite literally shrinking.
Now, what's really interesting about this slide is how the data creates a literal barbell shape. You can visually prove the massive polarization in watch buyer demographics just by looking at these towering columns of growth. You've got the affordable pieces soaring on the far left, and the true luxury tiers dominating on the right. And right in the center, a total dip below the zero line. People are either buying fun, accessible watches or serious luxury investment pieces. The mid-tier compromise is rapidly losing its appeal.
Let's move on to Section 4, markets, winners and losers. Where are all these polarized watches actually landing?
Let's rapidly list the global hubs driving all this demand. The United States continues to be an absolute powerhouse, up 12.7%. We're also seeing incredibly strong numbers from Japan at 8.8% and the UK at 12.2%. Hong Kong and Singapore are remaining super steady, posting around 6.7 to 6.9% growth, and the United Arab Emirates showing a really powerful 20.4% jump.
Now, the Federation's report does note that strong growth in places like the US, Japan, and Hong Kong was partly driven by a favorable base effect from the previous year. But regardless, the positive momentum is totally undeniable.
But, it's not all green arrows. Contrast that previous data by looking at the steep, marked falls in these traditional heavyweights. China is down a sharp 16.5%. Major European hubs are feeling the chill too. Germany dropped 10.6%, and Italy is seeing a severe decline of 21.4%. The geographical center of watch buying is really shifting, moving capital away from these historical strongholds.
Now, if you've been closely scanning the export tables, I know exactly what you're thinking. What about that 103.5% elephant in the room? There's a figure in the data that honestly looks like a total misprint.
That figure is France, which reported a staggering 103.5% growth. But before we assume the French are suddenly buying twice as many watches to wear on both wrists, the Federation offers a very dry dismissal of this figure. They clarify that this is a base effect broadly unrepresentative of actual market demand. So basically, it's a statistical anomaly based on exactly how and when exports were logged last year compared to this year. It's not a sudden retail frenzy in Paris. Always read the fine print, right?
Let's move to and see how this builds into our final section, Section 5, what this means.
Synthesizing all these data points gives us a very clear, cohesive view of a bifurcated luxury market. First, that barbell consumer base is entirely real. Explosive growth is happening at the sub-500 franc entry level and the over 3,000 franc high end, while the middle gets totally squeezed out. Second, luxury tastes are aggressively trending toward two-tone, with gold steel models heavily surging in value. And third, regional power is shifting rapidly. Markets like China and parts of mainland Europe are cooling off, while the US and the UAE are pulling in massive export numbers.
Which leaves us with one final provocative thought. Does this stark polarization in the watch market, booming extremes and a dying middle, reflect the broader global economy? Are we seeing a wider trend here, where consumers either want fun, accessible products or top-tier luxury, with absolutely no appetite for anything in between? It's definitely something to think about the next time you look at your own spending habits or the wider economy around you. Thanks for joining me on this explainer, and keep questioning the data.